Today I am here with the new accountancy video. This is video of class 12th. Today the topic is dissolution of a partnership firm. Under this, we are going to study the journal entries at the time of dissolution, preparation of realization account, preparation of capital accounts, preparation of cash or bank account. First of all, we have some starting entries. At number 1, the topic of the entry is when assets are transferred to the realization account. Dear students, whenever we are going to wind up the business, first of all, we will close down all the accounts which are existing in the business. So, number 1, we will be closing down the assets account. And for closing the assets account, the entry will be realization account debit to sundry assets account. Here, we have credited sundry assets account just because we are closing the accounts of assets. At number 2, we will be closing down the liabilities. And for closing the liabilities account, the entry will be sundry liabilities account debit to realization account. Here we have debited the liabilities account because we are closing the liabilities account. After closing the assets as well as the liabilities account, we will be going to sell the assets so that we can get the money from the sale of the assets. Then with the help of that money, we will be paying off all the liabilities of the business. So the entry for selling the assets in the market will be cash or bank account debit to realization account. Cash or bank account debit to realization account. After that, if at the time of dissolution there is any unrecorded assets existing in the business, then for that the entry will be cash or bank account debit to realization account. Because if there is any unrecorded asset, we will be going to sell that asset and getting money from that. So the entry will be cash or bank account debit to realization account. In the same manner, if at the time of dissolution there are any unrecorded liabilities, then we will be going to realize that. So the entry for realizing those liabilities or the entry for paying off those liabilities will be realization account debit to cash or bank account. Then if at the time of dissolution there is any bank overdraft in the liability side of the balance sheet, then we will be going to close down that or pay off that. So for paying off the bank overdraft, the entry will be bank overdraft account debit to cash or bank account. This entry may be in two ways. First of all, we will be closing down the bank overdraft, then we'll be paying from the realization account, or the direct entry may be bank overdraft account debit to cash or bank account. Then if there are any expenses at the time of dissolution, the expenses will be paid from the firm and by the firm. The entry will be realization account debit to cash or bank account. If the same expenses are paid by any partner, then the entry will be realization account debit to partner's capital account. Next, if at the time of dissolution there are any special purpose provisions, then those provisions will be closed down, and the entry for closing down the provisions will be provision for doubtful debts account debit, provision for depreciation account debit to realization account. Then we will be calculating the profit or loss from the realization account by adding the credit side of realization account and debit side of realization account. Then we will get the difference from the debit and credit differences. Then if credit side of realization account is greater than debit side of realization account, we will be getting the profit. And for transferring the profit to the partners, the entry will be realization account debit to partners capital account. At this time, this profit will be distributed among the partners in their profit sharing ratio, which will be given in the question. And if the debit side of realization account is greater than credit side of realization account, then there will be loss. And for distributing that loss, the entry will be partner's capital account debit to realization account. Now, dear students, after preparing the journal entries, we will be preparing the realization account. This is the ledger account of the entries. Realization account will be prepared in this manner. The format is like this. There are two sides of realization account, debit side and credit side. In the debit side, the items will be, first of all, we will be writing to all assets or sundry assets at their book value. But whenever we are debiting the assets and in this side, then we will not debit cash or bank balance because separate account will be prepared for cash or bank account. In the same manner, in the credit side, the liabilities will be closed down, and for closing down the liabilities, we will write by all external liabilities. After that, we will be paying the external liabilities in the debit side. So we will write to cash or bank account. And if we are going to realize the assets, the entry will be by cash or bank account. If any liability is paid by the partner, the entry will be realization account debit to partner's capital account. So, partner's capital account will be debit under the debit side. And if any partner has taken any asset, it will be written under the credit side of realization account by writing as by partner's capital account. When realization expenses are paid by the firm, the entry will be realization to cash or bank. So it will be written in the debit side. And if these expenses are paid by the partner, then the entry will be realization to partner's capital account. It will be written in the debit side of realization account. After that, we will calculate the profit or loss by calculating the difference between the debit and the credit side. So if the credit side is greater than debit side, then there will be profit. It will be distributed in debit side by writing as partner's capital account. And if debit side is greater than credit side, then there will be loss and it will be distributed among the partners in the credit side by writing as partner's capital account. Now, after preparing the realization account, if any partner has given loan to the firm, then that will be the external liability of the firm, and at the second number, partner's capital account will be prepared. After preparing partner's loan account, we will be preparing partner's capital account. Partner's capital account will be prepared in this manner. First of all, by balance brought down, partner's capital account will be started from the credit side. Because it is a liability, so it will be started from credit side by writing as by balance brought down. A and B's capital will be written under this. Then by reserve, if there is any reserve at the time of dissolution which is not distributed among the partner, now it will be distributed among the partners in their profit sharing ratio, writing as by general reserve or any other reserve. If there is any profit and loss account balance, then it will also distributed among the partners by writing as by profit and loss account. If there is profit on realization, then it will be distributed in the credit side of capital account by writing as by realization account. If any partner has taken any liability, then it will be written under credit side by realization account. If there is any loss on realization, then it will be debited under the partner's capital account, writing as to realization account. If any partner has taken any asset, it will be written under debit side to realization account. After that, we will calculate the difference between the credit and the debit side of partner's capital account. And if credit side is greater than debit side, then the balance will be written under debit side by writing as to bank account. To bank account means we are making the final payment. And if debit side is greater than credit side, we will write it as by bank account, and it will mean that the partners are bringing that amount of shortage in the business. After preparing partner's capital account, we will be preparing cash or bank account. It will be started as debit side to balance brought down. To balance brought down means opening balance of cash or bank account. If we have paid any partner's loan, then it will be written under credit side by partner's loan account. If any partner's loan has been recovered from that partner, then it will be written under debit side to partner's loan account. When assets are realized, it will be written under debit side of cash or bank account to realization account. When any liability is paid, it will be written under credit side by realization account. It is happening just because in the cash or bank account, receipts are written under debit side and payments are written under credit side. So we will do this in this manner. After that, we will make the total of debit and credit side. And if both the sides are same, then the answer will be correct. Cash or bank account total will be matched. Now we have difference between revaluation account, which we were preparing in the previous chapters, and realization account, which we are preparing in this chapter. What is the difference between both of the accounts? These are the differences. Number 1, revaluation account is related with the revaluation of assets and reassessment of liabilities, while realization account is an account which is prepared to realize the assets and to pay the liabilities. Second, objective. The main purpose of making the revaluation account is to record the fluctuating values of assets and liabilities and to calculate the profit or loss or condition. But the main purpose of making the realization account is to calculate the profit or loss after realizing the assets and payment of liabilities. Number 3, need. Revaluation account is needed at the time of admission and retirement or death of the partner. But realization account is needed only and only at the time of dissolution of the firm. Result. Revaluation account is calculated for getting the profit or loss which is to be distributed among the partners and own partners. But realization account is prepared to calculate the profit or loss on realization which is to be distributed among all the partners. So, dear students, this was the difference between revaluation account and realization account. I hope all the concepts discussed in this video will be clear to you. We will be going to discuss further concepts in further videos. Thank you.